Hey, I'm Alex. Welcome to Future X Present, where we dive into the real-time market context and build a narrative around what's happening right now. By blending current price action with historical data and technical analysis, we'll shape a clearer picture of our next trade. Whether you're here for key setups, strategies, or just a deeper understanding of today's market moves, this is the place to add more value to your trading. Let's kick things off with today's highlights. The market dropped off hard after the release of the JOLTS and ISM numbers, sparking a wave of selling. SPY officially closed down 0.90%, and according to data from Carson Investments, today needed to be a 2% down day to increase the odds of closing October green. So keep that fun fact in mind as we head into the rest of the month. Global news is also adding pressure as Iran prepares missiles to fire at Israel, driving up risk sentiment across the market. Defense stocks like Lockheed Martin, LMT, has rallied in response, signaling a shift in sector rotation towards safety. Today's action was pretty straightforward, selling at the open, followed by some consolidation at key levels and a bounce only to fade end of day. Let's break down what this means for both bulls and the bears. Bear case. First, the bears saw success as we broke below a significant trend line, which is often a signal that we could see some more downside and continuation. We also tested the lower end of our recent 2-week consolidation range. If we break below this range, we can see further selling towards 5691, the next major area of balance. The elevated VIX sitting at 19.27 suggests that volatility is still high, giving bears more momentum if the market continues to unravel. Adding to the bear case, the support found in the dollar DXY tends to put pressure on the broader markets, as a strong dollar makes US assets less attractive. Now for the bull case. Bulls have some things to work with. ES futures bounced off the expected move low and key support levels, creating a favorable risk reward for long positions. We are also holding above major daily moving averages like the 21, 50, 100, and 200 SMAs. As long as price stays above these, bulls can argue that we're still in a larger uptrend despite today's sell-off. Another thing I find interesting is the formation of the wicks at the low of day on both ES and NQ futures. This shows that buyers are stepping in and preventing a deeper sell-off. So now we got this chop zone that's acting like a battleground between bulls and bears. If we break out, we could see a strong rally. If we break down, we got clear targets below. Now what should we expect moving into tomorrow? Let's look at both sides again. The bulls need to hold the 5733 level for a chance to push higher. This is a key level of support, and if it holds, we could see a bounce towards the upper end of today's range. In fact, if we dip to tomorrow's expected move low around 5728 and recover from there, I would consider that even a more bullish setup because it shows buyers are stepping in at a deeper discount while trapping the bears. From there, the first target would be 5755 and then 5763. And if momentum builds, we could see a test of 5776 and beyond. Make sure to take profits along the way, especially if we start stalling at these levels. For the bears, the play is simple. Any spike higher tomorrow could be an opportunity to sell. My key levels for shorting would be 5755, 5763, and 5776. If the market fails to hold above 5776, bears could press for more downside, targeting the 5733 range low first, and then 5728 at the expected move low for tomorrow. If this bearish scenario plays out, I'll be looking at 5701 as the ultimate downside target, which would fill the weekly imbalance that bulls have been desperately trying to defend. So we got clear levels for both the bears and the bulls tomorrow, and now it's all about watching how the market reacts to these key spots. That wraps up today's analysis. We've gone over the key moves, discussed both the bull and bear cases, and laid out the technical levels to watch for tomorrow. If you found this helpful, don't forget to like, subscribe, and leave your thoughts in the comments. Let's keep navigating these markets together. See you in the next one.